It has never been as hard to grow money as it is today. And not because of manipulation or zero interest rate policies or negative interest rate policies or high frequency traders. They've got very little to do with it. The biggest reason why people are not growing their money any better than they were 35 years ago when the need to grow money started in 1980 is because of all the noise going on. No more now than ever on this planet's history is there information where you can be part of other people who believe exactly what you believe. So if you believe that gold is going to go to $500 an ounce, there are hundreds of websites and newsletters and outlets that you can believe with them that it's going to go to $500. And so you get caught in this small world of being around other people who believe what you believe, and though you couldn't find them 2 decades ago, now that you find them, that becomes real to you. But is it really real? And the exact opposite can happen. You can believe that gold is going to $5,000, and you can find hundreds of websites and newsletters and blogs and postings and people, thousands or tens of thousands of people who believe it's going to go there. And so you get into this mindset because there's so much information out there, and it's never been as easy as it is today to find like-thinking people, whether it's politics, you're a Republican, you're far right, you're far left. We've never been able to have our voice seem so loud, especially being around others. And that is actually not helping people grow their money because they're not able to step back and get a more unbiased approach. And the thing is, where is the signal? What's the signal to prove what you believe is true? And people aren't looking for this signal because they are just so wrapped up in the noise. And it's so easy to get wrapped up in the noise with Twitter and Pinterest and Facebook and whatever social media platforms are coming out next. And so what I want to do is I want you to look at some charts, because charts don't lie. Look at which direction they're going and what are they telling us, what we should believe, right? Because that is what I find is the most effective way to grow and protect your money. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend's podcast is racing higher and a potential correction. So something very interesting happened yesterday that hasn't happened in 15 years, and I want to point out what it is and talk to you about the implications to the stock market. And then I have another interesting thing that I found. It is basically one's potentially kind of dangerous and scary looking, and just how those two compare. So let's jump to the price charts and see what they're telling us. The first thing I want to show you is the S&P 500. This is actually, I believe, SPY. But SPY, S&P 500, just hit a new lifetime high. So never in the history of this planet has the S&P been as high as it is actually right now. Pretty amazing. What's most amazing about this, which I don't show on the chart, is when people are polled on how they are thinking bullish, bearish, neutral, people have never been, I think in the last 20 or 30 years, as neutral as they are right now. I mean, like, I don't really know what to do. So much money left the stock market in the 2008-2009 crash that has not come back into the stock market. So this huge move from 2009 till today, the 6 years, has been on the back of much fewer people, and those people who stepped aside are still aside. That is one of the reasons why having a signal that can tell you the probability of making or losing money is so important. But here we have a new lifetime high. That is very good for people who believe you should be bullish on the stock market. And this is just not the S&P 500. This is not lifetime highs, but markets moving higher. International markets are moving higher. China's moving higher. Japan's moving higher. Brazil's moving higher. South Korea's moving higher. Europe's moving higher. Countries are moving higher. It's not just a U.S. thing, which it had been basically for the last 4 or 5 years. The other interesting thing is the NASDAQ hit a new 15-year high. Now, it is still about 6% below its March 2000 high, which when it fell from March 2000 to the end of 2002, it fell 84%. 84%. Big box advisors and conventional advisors would just say, hey, just hold on to it, just buy some more. I believe you should step aside and have a signal to tell you when to be in and when to be out. To me, that seems pretty novel, commonsensical. And I'm not alone. Some of the best money managers in the world also believe that you should actually manage your losses. But here we are at the NASDAQ hitting a new 15-year high. And the S&P hit a new lifetime high while the NASDAQ hit a new 15-year high. So we have multiple different types of markets hitting new highs. The New York Stock Exchange hit a new lifetime high. What's interesting about that is about 40% of the stocks listed on the New York Stock Exchange are international. So we're getting kind of a full global movement up, of course, except Greece. Greece is still hitting new lifetime lows. So we have still more momentum to the upside. The path of least resistance is still to the upside, and not just for the U.S., but for many, many, many countries around the world. Now I want to shift this to the U.S. dollar. If you look at the screen here, this is a price chart of UUP. And this is a head and shoulders with the neckline at that flat red line. It's not a huge head and shoulders. You have the left shoulder, the right shoulder, and the head. It's not a huge head and shoulders, but it's a head and shoulders just the same. If it breaks the neckline, it usually falls the distance from the head to the neckline, which actually in this case is about 75 cents. So it wouldn't actually fall that much. It would fall right down to the bottom here. So if it did correct, it would still clearly be in an uptrend. But it is there, and it'll be interesting to watch this. What's interesting about the US dollar is the amount of hedging, people hedging that the dollar will fall, is absolutely gigantic. And I believe it's the largest short hedge ever on the US dollar. It is massive, 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 massive. It would be interesting to see if there was a short squeeze, meaning the dollar actually moved higher past the March high, which is right here, and had a short squeeze. But right now we have a little teeny tiny head and shoulders, which I'm going to be very interested to see how that actually affects gold. Now the head and shoulders in the US dollar is only about a month old or less, and the head and shoulders I'm showing you right here is 1, 2, 3, 4, 5. It's 6 months old. The bigger the width of the head and shoulders, the more powerful it is if it breaks. The peak of this head right here is right around $1,300 for gold. So if it did break this neckline, that means from a technical point of view, gold would fall to about $1,000. What's interesting right now is the dollar is down today and gold is down today. Now, one day, there's a correlation today. It doesn't mean there's an overall causation, but I just thought that was interesting. So I'm keeping an eye on this. Silver looks very similar to gold. It has this head and shoulders setting up. So it'll be interesting to see how this resolves itself. Is this one where it bounces off the neckline again and moves higher, or it kind of collapses below the neckline? And the answer is we don't know. I'll be watching it. And I'll give an update both with the strategy, the LTEX strategy, and anything I see from the price charts. The takeaway this week, the first one is dollar and gold. They're battling it out. We'll see what happens. Gold is in a 3.5-year downtrend. All this manipulation, all this intervention, it's actually not helping gold. One of the things, perhaps the only thing that moves the price of gold, is the change of concern. When people have an increase of concern about the future, they buy gold. When they have a decrease of concern, they don't buy gold. So dollar and gold are battling it out. And the other thing is, look, stocks are going higher. Whether you want them to go higher, whether they should go higher, whether they've already gone higher for 6 years and they can't go higher, they're going higher. And there's a significant amount of money that still is not in this. So it's not as if everyone is fully in the stock market. But that aside, which is more editorial commentary than anything else, the price charts are telling us they're going higher. Hey guys, this is just another step in helping you secure your portfolio and your future. Until next time, this is RC Peck.